Hello, everyone, and welcome to another episode of In Conversation With, where we at Capron Asia talk with some of the movers and shakers within the fintech industry globally. Today, I'm really excited to have Alistair Brown with us today. Alistair is the Global Head of Open Banking and Payments Group at EPAM. And today, we're going to go through kind of what he's seeing in the open banking space. So, Alistair, great to have you here today.
It's good to be here. Thank you for the opportunity.
And I mean, first of all, thanks for taking the time. To those who may not know EPAM that well, could you give us a brief intro on the company and kind of your role at the company?
So originally a software engineering specialist company founded in Minsk in 1993. Fast forward to this year, we're quoted on the S&P 500, based just west of New York. About 60,000 employees, nearly all of whom are software engineers. So the technology we produce for other organizations, the transformational work we do is technology based, but we consult, we design, and we build in a number of different sectors. Financial services is about 20% of what we do in our $5 billion turnover. So what I do is head the Open Banking and Payments Group, which specializes in an area that is increasingly sprawling worldwide into new areas, so experimentation, innovation in new phases of banking and the payments world, and how these things interrelate. So I've effectively cross-trained about 1,000 of our people to be domain capable in this sphere, so that we can hit the ground running and do all sorts of transformational programs across the entire ecosystem worldwide. So tier one banks, challenger banks, fintechs, niche providers of all sorts of services in that world. And it never stops. Every single year I think, well, maybe the purple patch is over. It's not. This stuff evolves at an eye-watering rate of knots, and we're very much in it. As I say, we consult, we understand the landscape, we understand the regulatory changes. We then design solutions to individual challenges for particular organizations and implement them using those software engineers and the consultants. So a great place to be, and very excited to talk to you about open banking in APAC in particular.
Yeah, that's a really good point. I mean, can we start off? I mean, maybe for the people in the audience who haven't been so involved in open banking, could you start off and kind of define it, and specifically within the APAC context, what does open banking mean for APAC?
So sure. Originally a European idea, and one mandated by the European Union in Brussels across what was then the 28 EU member states, introducing third-party capability into existing retail bank accounts. From that point, a number of years ago, it's not only been extended in its meaning and its implications into open finance, open data, and that greater sharing world, shall we call it? But then it's been reinterpreted for non-European purposes across the rest of the world, and that's where it gets particularly interesting, because it's no longer obligatory in any sense, but nonetheless the tools have been made available. The understanding of APIs that have been standardized across Europe in the Berlin group, APIs as they're known, they're there to be imitated, contradicted, optimized, and that's exactly what APAC is doing. The framework regulations are only just being written in the last couple of years, so there's a time lag between the original European version, but that's a good thing. And if you look at what's happening, particularly in Australia, as a good example, they've looked at the Anglo-Saxon stuff going on in Europe and gone, that's kind of interesting, but we can do better or different. So they've invented the CDR, their particular regulation on this stuff, but they've made it much broader. So they've made it apply not just to financial services, but to several other main sectors either side of that, and in fact across the entire span of commerce and industry. And that makes it not only more interesting, but it's more far-sighted. They've taken the lessons and indeed some of the mistakes from the European stuff, and taken it further for the Australian market. So it's all very, very interesting, but it's absolutely a work in progress. Only just started, really.
I think maybe let's focus in on that for a second. I mean, Australia is one of the markets, certainly here in Asia, where it's mandated. when you talk about the opportunities and weaknesses comparing the CDR in Australia as compared to the open banking regime in Europe, what are some of those nuances, and what did Europe get wrong that Australia is getting right?
So I think ultimately what this comes down to is data and the use of data. There's some very exciting stuff that we can all do, and the Europeans have gradually discovered this, and everybody else has been looking at it thinking, well, okay, if that's the point, how do we do it better and more swiftly and more capably? There's been a proliferation of challenger banks, particularly in England and Germany. There's been a whole set of niche providers who've looked at what we can do with data more in a more clever way. But ultimately, what is the point of data sharing is the bigger question. So if we can be clever about data sharing across a whole ecosystem and look at the potential business models that creates, suddenly we're into a genuinely innovative period where previously we simply didn't know enough about our customers in order to address their specific needs, and it was all a bit broad brush, frankly. So that set of thinking is now being looked at by many countries, and if it began in Europe, it's becoming less and less important, because I think the opportunity to reinterpret the use of data across one's own specific country according to one's own specific financial services rules and local culture, that becomes a very exciting set of prospects. But the Filipinos are not going to do this the same way as the Indonesians or the Chinese, and they're certainly not going to be doing it the same way as the North Americans, bearing in mind that the Canadians don't want to do it the same way as the Americans either. So a lot of this is about local interpretation. But what's further interesting here is that ultimately interoperability is going to become one of the great challenges of this stuff, as it is for many other features of financial services. And while we're occupied with the in-country opportunity set, we're not particularly thinking about interoperability. That's going to have to come later, but it is looming as a major challenge that remains unaddressed.
I mean, when we look at the interoperability challenge, I mean, how do you think that's going to be addressed? Because it's a really good point. I mean, that's the same challenge that we face in the traditional payments market in terms of AML regulations and everything else. When we look at cross-border, what are some of the options that they're looking at for that cross-border, or is it just something that's not being thought about enough?
As I say, it's looming on the horizon. There are many other priorities to address before we get there. So there's a danger that it's just not particularly addressed, because there are so many in-country specific requirements that need to be addressed first before we even get to that. And I think there is a capacity issue here. There's a regulatory change fatigue factor that comes into play, because there are only so many people who can spend so much time on this stuff. So in a way, it's going to be pushed back, and there are many more recently arrived macroeconomic challenges that are testing everybody's patience and ability to move forward. So if I look at not only the technological difficulties, so we're still looking at tech stacks that are 30 or 40 years old in some cases, with some of the more established incumbent banks worldwide. Moving away from that through cloudification and modernization of various other sorts is still an ongoing challenge, and budgets are no more generous now than they were a few years ago, if anything less so, significantly less so. So there's going to be a stall on innovation. There's going to be a certain retrenchment going on, which means that we're just not going to get to interoperability until much later, to be honest.
Yeah, I guess other priorities for the industry. I want to go back to the Asia context. I mean, as we discussed before, I mean, some markets are mandatory implementation of open banking, like Australia, and somewhat with Hong Kong. But for other markets like Singapore, I mean, how incentivized are banks in a place like Singapore, where there are guidelines in place, but it's not mandated? How are they incentivized to create solutions? I mean, aren't they just giving away their business if they do?
There is that risk, and it's a perception that is held by many organizations. But I think if you take the longer view, the opportunity to bring in more customers, consolidate one's customer base, but also bring in more customers, is really strong. because the key phrase here is financial inclusion. There are worldwide approximately 2 billion people who don't have access to financial instruments of the sort that you and I might take for granted. And one of the great opportunities ahead of us through open banking and its introduction across the world is to include those people. So if I'm an incumbent bank, what I'm looking at is making sure that the individuals who are not part of the scene so far become so, and therefore create greater volume of activity for the incumbent bank. So there is an incentive there. It's easy to miss it because it's difficult. It's another commitment. It requires technological innovation. It requires new business models, etc., etc. But the opportunity is absolutely there. If you look at regulation along a spectrum from the entirely autocratic at one end to the very liberal and barely existing at the other, what we've got is a different approach to the same stuff. It seems to me that being an Englishman, my approach to this thing is the English way, actually, which is that you need enough regulation to give it all a framework, but enough for the liberal innovators to do their thing and make more of this. Why is that important? Because innovation on top of all of the general availability of new tech and new business stuff is something that needs to be encouraged from the market. I'm more of a market-led person than anything else, and I see that as something that would come from these less regulated markets, and it's there. The opportunity is there, and the skill, the talent is sitting there. It's not the right phase in terms of the macroeconomic cycle at the moment to be addressing these things full on, because there's so much else that needs to be addressed first, as I say. But I suspect the Singapores will be coming through at a hell of a rate in the next 5 years.
Mm-hmm. That's a really good point. I think I might know the answer to this, but this ability to create seamless experiences for banking customers is something that the digital banks seem to be very good at. I mean, you talked about the approach that some of the incumbent banks or the traditional banks are taking. Why are they struggling to match the agility of the digital banks?
Banks are slow to make decisions. They're conservative. They have to tick many compliance boxes internally before they can move on with new ideas, some of which is entirely the result of being caught not complying to other regulations historically, and we all know enough about that to think that they're actually taking an intelligent approach. What is interesting is the absorption of new ideas from challenger banks and fintechs into the existing incumbent banking world, because now and again there's a leap forward, and the best ideas are copied, and of course the retention of the larger volume of consumers back into the existing incumbent banks is the result of that, which is why many challenger banks still don't make much money. And if the timing is ripe, then the relationship between incumbent banks and fintechs remains simply a series of steps in the ongoing, very long-term evolution of banking. So the power and the volume is retained by the incumbents. But it's a slower process. So there'll be a stop-start effect in the external world beyond incumbent banking. If they play it right, the incumbent banks still succeed.
Right. I mean, for the incumbent banks, I mean, you work with a lot of them. How can they succeed? I mean, if you were to kind of distill it down to maybe say 3 lessons for the incumbent banks, I mean, what are the 3 most important lessons that they should look at to be successful in kind of managing these legacy systems and legacy approaches to the market?
So a number of years ago, I went to Sibos, and it was quite clear at that particular conference that fintechs and incumbent banks were seeing each other as enemies, and it was not a collaboration. It was a standoff. It was ugly. It was toxic. It was not at all constructive in any meaningful way. 18 months later, suddenly the exact inverse was applicable, and on stage one would have the CTO of a large bank and then a more trendily dressed fintech CTO talking very amicably about the way they were all going to move forward together. So the first thing is, this is a collaborative ecosystem-wide evolution that we're witnessing, but it's going at different speeds in different regions, and the level of collaboration varies according to the individuals in question. But I think we've moved to a better place in the last 3 or 4 years. I think the level of collaboration is superb in many instances. There have been innovation labs created by some of the more conservative organizations as if to contradict their own culture. And that's hugely positive, because what it does is form a bridge between the old and the new, between the existing incumbent banks and the new guys out there. There's been also a slew of acquisitions of the fintechs into the incumbent banks, and the world is divided on that one as to whether that adds value by the acquisition of the new thinking, or maybe it destroys it by, of course, absorbing a new culture into an old one and effectively transforming the new culture into the old one, and therefore missing the point of the innovation capability that should bring, and maybe doesn't once it's been bought up lock, stock and barrel. So acquisition might be a good idea. There's an equal theory that says keep them at arm's length, but buy most of their shares, so that there's a level of control, but there's still some sort of distance in some meaningful way between the two things. So the innovation continues to have an edge and to be equally effective.
Yeah, that's really interesting. I mean, we've seen that approach, and not all of it's played out yet. But I mean, I think some of the investments that banks have made have not had the results, certainly, that they were looking for in this case on some of their acquisitions. I mean, the other party in this whole discussion is the regulators themselves. When you look at the Asian regulators and their approach to open banking in terms of kind of understanding and keeping on top of it, what do you think? I mean, do you think the regulatory frameworks that countries like Australia, Singapore, Hong Kong have in place are effective? And what more could be done to improve it?
So I'm a big fan of the CDR. As I mentioned earlier, it goes across a number of sectors. It's not isolated to financial services in all their glory. It will look at utilities, it will look at all sorts of other areas. And of course, these things overlap between each other. It plays to the broadest possible interpretation of open data. And I think that's thoughtful, it's long term, and it will be fascinating to see how it all plays out. And I think we'd be well wise to extend our regulatory frameworks elsewhere in the world to be equally broad. So that's my first thought. The other thing is APIs, and the general use of APIs is something that the world is still trying to understand properly. There's been what I would view as an over-proliferation of APIs by the financial services industry in the last 2 or 3 years, to the extent that there's now a second wave of simplification, optimization of API technology. So what's that got to do with open banking? Well, coming back to the Berlin Group, the original set of APIs specified by Brussels for the 28 EU member states was honoured in the breach, in the sense that, okay, we had a standard and that's great, but how do organisations differentiate between each other in a competitive landscape? And the answer is by reinterpreting those APIs in slightly differing ways. So instead of creating an absolute standard, what it's created is something that's referred to but differed from, in order for competition to continue. And I think we're seeing that taking place in APAC as well. There have been attempts to specify standard APIs in the open banking framework in various of the APAC countries. And I think it'll go the same way as the Europeans, because people are creative. People will rewrite and change and modify and optimize in APAC just as they would elsewhere.
That's interesting, and I guess that ties back to some of the challenges that once we get to the point of looking at cross-border, we're going to face even more challenges because of those approaches. I mean, let's take a minute to kind of look into the future now. I mean, what if we look 5 years out? What do you think will surprise us about the development of open banking in APAM? What are we not thinking about today that is on the horizon that really will be different when we look back at this?
Well, we don't know what we don't know, fortunately, because it makes the world more interesting. I think the opportunity to invent new stuff is absolutely there. As I say, we've got some fairly heavy economic headwinds that'll stop a lot of it happening as liberally and as dynamically as it might have done 2 years ago. And I think the ready availability of a lot of private equity funding into fintechs is going to become a thing of the past, and tighter controls will be introduced into organizations using PE money to move ahead, and that's all right and good, frankly. Nonetheless, I think that process will have a tapering effect, and with any luck, it will siphon off the best from the less good, and we'll see the new stuff. So there's the process. What's it going to create? Frankly, we don't really know. I think financial inclusion, coming back to that main theme, suddenly people who simply only have a mobile phone will become a lot more capable of managing their lives, because they'll have a greater awareness of money, what it can do, what it can't do, and what it can be used for in a life at the bottom of the socio-economic pyramid, and that's hugely exciting. I don't know exactly what that looks like in many cases, but if we look back at the introduction of M-Pesa into Kenya a number of years ago, it went extremely well, and suddenly the farming community of Kenya was a lot more capable of finding the right price for their cattle, and all sorts of other stuff that hadn't really been thought about until that point. So there'll be a lot of very exciting stuff that goes on.
That's really interesting. Yeah, I think we've only really scratched the surface on this. Practical advice now. I mean, for banks today, what should they be doing to prepare for the future of open banking today?
Frankly, specialize, have a group of people who really do understand it, who've actually read the regulation, understood it thoroughly, talked to the various players across the ecosystem who are thinking about it every day rather than doing it on the side of their desk, because this is genuinely revolutionary, and we need to get the best out of it. There are relationships between banks and large corporations that can be optimized in ways that simply haven't been thought through yet. And if you look at the impact of ISO 20022 and the enriched data that produces, that relationship between banks and large corporations can be completely revolutionized, because they know more, because that data is richer, because they understand the opportunity set far better. And that suddenly takes us into a new zone where there's a massive amount of experimentation and new models can be built. So there's a lot to come from this.
No, it's interesting. I mean, it remains to be seen what these new models are, but it's certainly going to be exciting. What keeps you up at night? What worries you about the space?
The vast majority of IT budgets for large banks are spent. It's spent on keeping the lights on and keeping old technology going, and sticking plaster is placed on places where there's already sticking plaster, and so on and so on. Wouldn't it, and this is an idealistic statement, wouldn't it be better if more than a tiny percentage was devoted to the innovation stuff? Well, the real world isn't like that, because if you don't keep the lights on, the whole place goes dark, and the innovation can be forgotten as well. There has to be a better way, and I think as we move gradually away from legacy tech and we push into innovation stuff, maybe that balance between the old and the new changes, but the money isn't always put in the right place.
Yeah, that's always been one of the biggest challenges. I mean, finally, technology has a seat at the table, but is the money being used in the right way? And then, speaking specifically about EPAM, what's the future of EPAM in open banking? What are the focuses for the company coming forward?
Well, our obsession is with transformational programs driven by new technology into new business models. So it's the very stuff that we're talking about. It's what we do, and it's hugely exciting. Every time we uncover a new opportunity with a client and go through the whole business of consulting, designing, and then building the solution, we realized that there are 7 other programs that we've simply not been able to do because we've been preoccupied with the one that we are doing. There's so much going on. One of the ironies of this whole thing is that an attempt at standardization has produced further fragmentation. So it's completely counterintuitive. But of course, the more fragmentation that there is, the more opportunity there is for an organization like us to go and work in 17 places rather than just one. There is no one simple answer. There are many, many answers. It makes it exciting. It makes everything much more interesting. It means we're constantly busy. And frankly, the team I run could be 5 times the size. There you go.
So we expect to see more growth in the future. Alistair, thank you so much for this. It's been great to talk through this with you and this tour of open banking.
A great pleasure. Thank you.
And thank you everyone for joining us today. The conversation today on In Conversation With is also tied into a report that we just recently published with EPAM, looking at open banking and the impact on legacy systems. You can download it in the QR code in the corner. We'll have a link in the show notes about how you can download that. So thank you again for joining us today. This has been In Conversation with EPAM, looking at open banking in Asia Pacific. Thank you.